Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, August 30th, 2019 edition of DecisionPoint with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to the show, and I do hope we will have you back. We do have a quick announcement. I'll let you go first.
Okay, I just wanted to be sure to let everybody know that on this show we will have no hurricane updates. We will not have clips of people carrying cases of water out of Costco or generators out of Home Depot.
Yeah, it
You can
does
go
seem
to
to
the
be.
news to see that, plenty of it.
Yes, exactly. And I do have another announcement that I almost forgot about. We will be moving ourselves to Mondays after this week. And so the next Decision Point show will be on September 9th, since there is no market open on Monday. So we will not have a show this Monday, but next Monday we will, September 9th. So same time. Do hope to see you with us on September 9th when we move to our new time. All right, let's go ahead and look at what's going on with our agenda today. Broad market indexes, price relative, we'll look at that. Today is the end of the month, so all of our signals have gone final. So we will look at the weekly and monthly charts today. We'll, of course, go over those DP indicators. I wanted to throw in the sector candle glance right before that, right before I go over those scoreboard indexes, just to give you a feel for what's going on. After we look at the sector scoreboard, big $4 gold, oil, and bonds, Carl will be taking that. And of course, we have his grab bag as well at the end of the show. So you'll want to stick around for that. All right. So let's go ahead and get it started. First of all, let's look at the DP scoreboards. As I said, we did get 3 new signals today. Right now, we got PMO buy signals on all but the NASDAQ 100. And this means that on the daily chart, our PMO had a positive crossover its signal line. So we're waiting for that to happen on the NASDAQ 100, and it was extraordinarily close today, but did not get it. So we'll look at those charts. And then the Decision Point sector scoreboard. I wanted to point this out. We have no signal changes at this point. Intermediate term trend model based on our 20, 50-day EMA crossovers. So on these 4, mostly except for technology, mostly defensive sectors where we have buy signals on, but everybody else is sitting with a neutral or a sell, meaning their 20-day EMAs are below their 50-day EMAs. And currently only one sell signal on the long-term trend model, and that is for energy. And this means that the 50-day EMA is below the 200-day EMA for XLE. All right, let's go ahead though and come look at some charts. I've got the sector candle glance I wanted to point out to you. It's got, just like we have on our regular daily charts, I have the 20, 50, and 200-day EMAs. These EMAs are not necessarily visible on some of these because the 50-day EMA is so far above its 200. But I just wanted to give you a quick peek at these, and you can see that the ones that are still waiting on buy signals are still fairly far away. We've got materials, financials, there's still a lot of margin between those 20s and 50s, the industrials as well. Looks like technology will hold on to its buy signal for now. Comm services looks like it's getting ready to come back up, maybe get a buy signal there. And consumer discretionary, very thin margin between the 20 and the 50. So that gives you just a little bit of a peek at what's going on with our scoreboards. But let's go ahead and look at the regular charts that I usually bring up for you. And if I can get my, there it is. I gotta always find my mouse. I don't know what happens there. Okay, so we'll start with the relative chart of, this is the S&P 500, and then these are the broad market indexes that and their price relative to the S&P 500. And I like to keep an eye on this just so I can see where there might be some new strength building or where we're seeing the weakness. And at this point, I found it rather interesting. You can see with the Dow Industrials and with the S&P 400, we're actually starting to see a little bit of a move to the upside. If you count from last week, though, on IJH S&P 400, it's almost the same reading. So, but it does look like it is going to start to trend higher. Still seeing the S&P 600 lagging here in relationship to the S&P 500. Really need to see those perk up. We just have been waiting for a very long time, and it's just not happening. Broad market indexes, just to give you a peek at all of the ones that we do follow and cover, all on one chart here for you. There is the SPY. You can see just a tiny little breakout trying to forward itself this today, but it ended up closing, of course, well below that intraday high. We can see S&P 500 equal weight, well below its last all-time high, as you can see back here. And one of the things that I am noting with the equal weights, and Dad, feel free to interrupt here, but we have that declining trend. We're finally getting a little bit of a move out of it, but it's just telling me that the large caps are still kind of holding things up here for the S&P 500.
Right, I agree.
Agree. Yeah. Okay, good. S&P 400 still well below its all-time high that was hit last year, as well as the S&P 600. And I mean, look at this margin. That's a lot of work that we need to see the S&P 600 do. It's just been really flat here, and we need to see some improvement there. All right, looking real quickly at the global markets. And mainly the chart is here for you to just take a peek at how the rest of the world is faring against our S&P 500. And as you can see, most are in declining trends right now. And a lot of them have not had all-time highs since, well, you can see right here that India managed to get one fairly, well, recently back here in June. But really with everybody else, German, DAX especially, look at UK, when you look at EWU and the Nikkei, still in a declining trend. All right, quick peek at the scoreboard indexes. And I was watching to see how many of these indexes ended up with a pop just above overhead resistance in the very short term. Most of these, the Dow did close below that. This is that PMO buy signal I was talking about, and I do think that this is positive, seeing the OBV with rising bottoms now. Weekly chart, just want to point out that we still have that sell signal and a rising wedge, which are bearish, but you can see that the PMO is trying to turn itself back up. In the monthly view for the Dow, we're still, on that sell signal that we got last year, and the margin is still fairly fat here, I would say, for the PMO on the monthly chart to turn itself around and actually close out that sell signal. And as you can see, typically when we get these sell signals, they result in difficult times, typically. All right, NASDAQ, this is the one that did not get its PMO buy signal. You can see very, very close on that. Should come in next week if we get, halfway decent trading day. Weekly chart. And there we go, rising wedge, and the sell signal still intact. And if you look at the monthly chart, we're starting to see a little bit, we started to see the PMO perking up a little bit, but we got another head fake and another top below the signal line, which is very bearish. All right, we'll just whip through the OEX really fast because it's not much different here. The only thing I would note is that it did not get over its short-term overhead resistance, and there is that buy signal for you. All of these charts, by the way, that I'm showing you are in the DecisionPoint live chart list. Just go to the articles tab, click on the DecisionPoint blog, and the link to these charts is right there at the top. We have another rising wedge here, and the PMO sell signal still intact. And then there you are in the monthly chart. Again, another top below the signal line for another large cap index. S&P 500, I was watching this little declining tops trend line that we did manage to get above, but notice we didn't break above that short-term overhead resistance yet. We do have that buy signal that came in. today. And then as I was noting earlier on the other charts, we are still seeing a rising bottoms trend line here on the OBV. This has just been such a volatile, congested area right now, and I still don't feel good about it. I still wouldn't be counting on a big breakout move here. It's just everything's, there's just too much volatility out there. And here you go, PMO sell signal still intact on the weekly chart. And I do see a rising wedge. It's a little, it almost looks like a rising trend channel, but it is not. And the monthly chart for the S&P 500, again, another top below the signal line. And we are still on that sell signal, waiting for that to resolve. All right, our indicators, I did check on them and they have updated. So let's go ahead and look at those. And, you know, we saw a slight increase in volume today, negative volume, but it's been rather flat mostly this week, I would have to say. When we're looking at the breadth, new highs, we did get some more new highs in, but certainly not climactic readings here on the advanced declines for volume and just the net advance minus declines. And then notice also the VIX pretty much closed right in the middle of the Bollinger Bands on its average. So unfortunately, when I look at this chart, it isn't really saying a whole lot. Short-term indicators, here we are. Now this was interesting. They had turned up, they were trying to turn up on Wednesday when I wrote about them. They did turn up, at least the STOV did, and now they're both, you know, shot skyward. But notice now they are in overbought territory, both of them, and that leaves us vulnerable to a market decline. So if we fail at this area of overhead resistance, which I'm inclined to believe we will, you know, we've got a long way down before we hit support, and that would be around 28.25. Now, the intermediate term picture does look brighter. We did get those crossovers. We do now have both of the indicators above zero. The volume, the ITVM is lagging just a bit here, but it is now in positive territory. And they certainly are not what I would call overbought. So the intermediate term picture does look a bit better here, but in the short term, we are overbought. So it's, you know, something to keep an eye on. But I suspect we still have some more to work out here before we can get that breakout. But it seems based on these indicators that we should hopefully resolve to the upside. All right, time to pass it to you, Dad. What you got?
Just figuring out how to get there.
Well, I know you've got it. There it is. We did it earlier.
Wrong page, but right browser.
There you go.
Okay. Let's get up to dollar. It's staying strong. It's breaking out of the a rising wedge pattern, which is the wrong way, which is bullish in this case, because that's a bearish pattern. So it's going up, continuing it strong. And I, you know, just can't think of any reason why it's going to get weaker at this point. Same thing is, how do I get rid of that green frame?
Oh, you're not going to, but we can see your whole screen. It's just telling us that you're sharing.
Okay.
So we don't see it.
Okay. The rising wedge again, and you can see the long-term line of resistance. Well, it's overcome that. It's not decisive yet, but it's certainly on its way to being so. Let's see the, notice how the,
oh, there we go.
The PMO has been moving sideways in a positive range. So that's showing us basically a steady momentum upside, to the upside, which is. Here we are on the monthly chart, and back to 2008, it's actually exceeded that high. So, and the monthly PMO is rising, looks good. Gold is in a rising wedge formation. We've got a divergence here, negative divergence on the PMO. But this gold has been extremely well behaved, especially for gold. And although we might get some correction back down here, I still think I think we're still in good shape. We're still not showing. We're still showing negative sentiment here, which is actually positive in terms of the people aren't jumping on board now in heavy numbers yet. The weekly chart, notice we've got a very steep rising trend. And the PMO is seconding that. And we're getting overbought based on the range we see on the chart. Could get a correction back to this rising trend line, but it's actually pretty steep. And I think it would be helpful if it did a little more than just that. See right here, it's really going vertical on the monthly chart. And note that we've got a 50% decline from the all-time high, and then from there we've got a 50% advance from the bear market low. Look, things are looking good at the start. What I would expect to see, we've got a saucer, and I would expect to see this to be chopping around and maybe put a handle on that saucer, and that would clear the table for higher prices. Oil, they were featuring this on Fox Business. The price was moving about $3 today. I don't know what the big deal is. As you can see, the price is in this range right in here, and it tends to make these 2 and 3% moves daily on a daily basis, but it's staying within this range, and I think that's where it's going to remain for some time. We've been getting a lot of negative news, in the Middle East and that type of thing, and yet this is really steady, which to me is a reflection of more than adequate supply from the U.S. Production. Same here, I'm looking at a range of 42 to 76 or 77 there. And right now it's still got to break out of this triangle. And I think it will, if it keeps moving this way, it's going to break out just by default, but maybe not any particular direction. On the monthly chart, again, you can see a nice range here that it's been maintaining for over 3 years. And we've gotten back from oversold to neutral, and this could continue for some time. Bonds are continue to head higher. Notice that the yield is, well, I better talk about that on the next chart. Yield is back down at a pretty low point here on the 20-year bond. And so I'm thinking maybe we're going to start seeing some consolidation or pullback on bonds. On the monthly chart, wow, what a breakout, huh? And again, there's the 20-year bond yield at a many-year, multi-year low. So I'm thinking maybe that's done for unless the Fed does cut interest rates again. Wanted to show you this. If you're worried about yield on bond, how about since the low last year, bonds have advanced over 20%. The 30-year bond over 20%. Pretty good. Looking at the 20-year bond yield, we've got a 50-plus year chart here, and we're right down around what it was in 1946. So back when I was 5 years old. So we got a falling wedge. It's kind of a limited to how much lower it can go. Although, yeah, we talked about negative interest rates, so maybe that's not going to resolve the way we would expect to the upside. But just a long-term perspective, I love looking at these kind of charts. It's long-term charts. We got an inversion that stuck this week. The 2-year, to try to sort this out, it's good to look up here in the upper left. You can see which yield numbers where the inversions are. But right now, the 1 month and 3 month treasury bills are exceeding the yield of the 30-year bond. The big one that we talked about this week was the 10-year versus the 2-year. The 2-year now is 1.53 versus 1.50 on the 10-year. This it's not a great situation, but when they talk about this, they say, well, this is signaling a recession within a year and a half. Well, that's not timing, folks. This is not a good thing to be seeing. The long-term, this one takes a little while to load because there's so much on it. You notice the last 2 times we had these peaks, we had declines in the market. And now we have another peak in rates and heading down. Notice right here, the market went down. That was about a 10% decline, as I recall. And then the Fed lowered interest rates and stopped it and stopped it cold. So just don't know how that will continue to fare, but it's going to be interesting to see how this plays out.
The good old crash prevention team.
Right. Okay, the broad market bullish percent. Got the pullback in the broad market, and we've got the bullish percent index for the S&P 500. It's doing about, that's what, 53.40. Also the NASDAQ composites at 43. We're looking at, this is the percent of stocks within this index that are on point figure buy signals, which is pretty low at this point. Same thing with the New York Stock Exchange composite, down in the mid 40s on the bullish stocks. So it's not a good situation. Okay, I wanted to mention the Climax Indicators. We've got, I like to keep the total volume for SP 500 as one of those indicators, and notice that the volume has been well below the 1-year average, and for most of the time in the last 2 weeks. We've had climactic activity in both directions for the whole month, and it's been more or less an initiation, and then immediately get a climax right after it.
Exhaustion.
Climax right after it, and it's both directions. So then we've been in this trading range. That trading range, I do believe, is going to resolve downward because it's basically, we came off a high, an all-time high, and broke down, and we've been consolidating, but this is also called a continuation pattern, which means it should result in the downside. And I wanted to talk again about, we've got about 4 minutes, so don't let me get too.
Yep, I'll cut you off when you have to.
I keep wondering, I am in wonder of how good of an indicator this turned out to be. And I always looked at the percent of stocks above their 20 EMA. I looked that out as a short-term indicator, which it is. You can see it moves pretty fast, but I never actually started lining up market tops and showing how they lined up with how this when deterioration in that indicator. And we've had 3 within the last year that really great indications or warnings. We're talking about dropping when the stocks is below its 20 EMA. It's a very weak. It's a weak stock in the short term. It could be, and this is a very accurate snapshot of what these stocks are doing. And of course, it's below the 20 EMA. It could be, price could be moving back up towards the EMA on some of them, but I'm just saying it's really a really accurate view. We don't always get any look at this one here at the parabolic advance. Everybody was buy. So then we never did get deterioration, and it just dropped off, but along with the price index. But this, I cannot emphasize how much, how cool this indicator is, and I'll be watching it.
All right, I'm going to make you close it out now. We still have a little bit over a minute, though. I mean, I know we've been watching these indicators before, but it is interesting that neither of us have really picked out the strength that it does have. All right. Okay, so I do want to thank everybody for joining us today. I hope you enjoyed the show. If you could complete that survey when you exit, we'd really appreciate it. If you have any topics you'd like us to cover in the future shows, we'd love to hear that. And as a quick reminder, DecisionPoint will be changing its time from Fridays to Mondays at 4:30 p.m. Eastern. So look for us there. Have a great weekend, and well, happy trading.